What's up, guys? Welcome back to another day trading video, and today we're gonna go over this whole week about candlesticks. All right, candlesticks. I think there's a lot of I teach. I'm not sure what I've been missing, what I can, what else I can teach. I mean, there's different strategies I can teach, but I have to learn those strategies. I mean, for you guys, I would, but they're not really my strategies, and I don't really want to learn strategies, not to teach you guys, but to for myself. I'm sticking to my own strategy. If I learn a strategy, I feel like I'm just gonna let me try the strategy out. I feel like when I go into the chart, I'm gonna be like, you know, it is showing indications for this strategy, so why not try it? I feel like I'm gonna do that. You know, with trading, it's a very dangerous game. You are not yourself when you trade. All right, you say you're not gonna take more than one trade, you end up taking more than trades. You say you're not gonna sell in a bullish market, but you end up selling because you think, oh wait, if I can catch the reversal, then I'm gonna be a millionaire. You know, that happens to the best of us. This happens to all of us. But today I am going. But if you have anything you want me to teach you guys, please leave it in the comments down below. I would really love to hear your thoughts. So let's go into understanding candlestick. All right, we're gonna understand candlestick patterns. All right, so there's many different patterns you can see within a candlestick. All right, what is the stock market made out of? Candlesticks. All right, bunch of these grouped together make a candlestick. No, they make the chart. All right, they make the chart within your with your seeing. You know what I mean? Everything. These candlesticks make the chart. So let's go into understanding them real quick. All right, for a green candle, the bottom is the open, the top is the close, with the very top, this being the wick. Actually, this part being the wick. So is this, with this one being the highest and the bottom of the wick being the lowest. So this is right here. This whole thing is the body. The same with the red candle. Mark that out. Okay. We have, but with the red candle, the bottom is the close and the top is the open. Why? Because it opened at a price, let's say at $7, but since it's a red candle, it's indicating that the value went down. So it opened at $7, but now it's at $6. With this lowest being $5.50, with its highest being $7.50. All right. So it reached the highest of $7.50, but it reached the lowest of $6.50, with it closing at the $6. All right. So, and since the red candle indicates that the price went down. All right. So for bearish, that's good news for us. For bullish, that's not good news for us. And same with the green candle, it opened at, let's say, $6. It closed at $7, with its highest reaching $7.50 and its lowest reaching $5.50. The exact same thing. All right. It started at 6, ended at 7. It went all the way up to $7.50, but it couldn't stop right there. This is a 1-minute candle. So this is telling us the information what happened within the minute. All right. Very simple to understand. So let's go on to understand, how do we use this to understand the stock market. All right. We know how candles work, but there's more information than just meets the eye. There's more information than just this. How do we use this to know where price is going to go? All right. Because there's a way to do that. So let's figure it out right now. So let's go into understanding candles. All right. So let's say we're seeing normal reaction of candles like this, where they make a little bit of a wick, bit of a wick both on the top and bottom with a big body, telling us good, strong, normal. This is a normal green candle. But let's say we see a candle like this, where there's this candle overtakes the previous candle. Now, if this was a red candle, this would be an engulfing candle. So let's write an engulfing candle. Like, let's write a red candle right here. Now, this candle just completely overtakes the previous candle, and the previous candle was a red candle. That's an engulfing pattern. That means there was way more buying. The buyers were engulfing the sellers. So that's a good indication that the stock market would go up. But this is also telling us that there is a lot of buying within the market. Why? Because of this whole green candle. This whole green candle was made by what? By buying. Why? Because it's a green candle. Green means there's buying. So there's a lot of buyers. So if you're a buyer, I would want to buy somewhere, probably on the top, maybe. You know, who knows why? Maybe, or actually on a pullback. So if a pullback happens, I'm gonna buy, boom, right there. All right, waiting for a retracement, because it's a good indication indicating that there's a lot of buying. All right, and same with the sell. So if there was a green candle right here, a normal green candle, but then boom, a big red candle just popped up out of nowhere. What is that telling me? There's a lot of selling. There's a lot of people on my side. So if I'm bearish on the day, that means there's a lot of people on my side and I want to go down. All right. So that's a good indication right there. And there's more you can use. I don't know, I'm using my hands. There's more you can use like this one. This is a good one. When you're seeing green candles, normal ones, let's just make boxes, whatever, blah blah blah, or wicks, right? And then we see that the stock market, actually, yeah, let's use red. Let's say that the stock market, like something happened and it goes all the way down. Let's say it goes all the way down. A minute hasn't passed yet, though. Let's say that a minute hasn't passed. It goes all the way down, but then it buys all the way back up and closes like this. What is this telling me? That there is a lot of buying in this area. People were selling, people were trying to sell, but the buyer was like, no, 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 no. We're not going to let that happen. What does that tell me? There's a lot of power in buying. Why? Because they didn't let this close. If there was a lot of sellers, this would have closed as a full red candle. But no, it only happened as a wick. You see that? And the body closed right here. So that's telling me people were trying to sell, but the buyers didn't let that happen. And this can go the same for a green candle. So let's say there was a lot of selling right there. Boom, 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 going down. And then people were buying. Oh my gosh. But the sellers came in and brought it right back down within the same minute, within that minute. What is that telling me? That there's a lot of selling where in this area and this area right here. Same as the red candle. There's a lot of selling, there's a lot of buying right here. Because once it reached to this level, it went back all the way top. Once it reached to this level, there's a lot of sellers within this area that brought the price back down. So when you're looking at the market live, you're gonna see these kind of reactions. You gotta know what's happening. You gotta know what exactly is happening. So if reactions like this happen where a lot of selling is going down and it forms the candle, the minute has happened, that means there's a lot of selling right there at that moment. But if it goes all the way down, hasn't formed yet, the minute hasn't passed, and it buyers come right back in forming this big long wick, that means there's a lot of buying. There was people trying to sell, but the buyers were more powerful. Whose side am I going to pick? The buyers. Why? Because sellers tried to bring the price up, try to bring the price down, but wasn't able to, with the buyers coming in and bringing it back up. So remember to watch out for things like this. All right, you have to have technical analysis. I'm pretty sure technical analysis and fundamental, where you can read the news. But you have to have good technical analysis to read the market, read the chart patterns, read the chart entirely to know what is going to happen next. Because you can use patterns, you can use a strategy, you can use your risk to reward, you can use all of this. But if you don't know how to read the chart, then you're not going to be able to see what's going to happen next. Because your strategy, your everything relies on what you can do and what you can see in the market. All right, if I'm going bearish on a day and I see this big red candle, at first some people might think it's good because it's a big red candle. But no, I see into it more deeper. You as well. You see that it's only a small red body and a big long red wick, and that's not good. Why? Because if there's a big long red wick, that is telling me people tried to sell, but buyers were more powerful and brought it right back up. So who's more powerful? The buyers. And if I'm a seller at that moment or day, I'm not gonna be good on that trade. Let's say I take a sell. What happens next? Buyers keep pushing it back up and I lose a lot more money. Same with the sell side. Let's just say I buy right here. Buyers bought it back up, but the sellers were more powerful, brought it back down, and the red candle forms, bringing stock down. Now it's a green candle, but ignore it. But you have to be able to read candlesticks. All right, read fundamental analysis. So I'm gonna actually give you homework. Go out there, watch a lot of fundamental analysis on how to read the chart, how to understand candlesticks, everything. Warrior Trading, TGR, Trading Lab, I think is one. Go to them, alright? But yeah, that's it for today's video, guys. Remember to make sure to do that homework. That's it for today's video, guys. If you like the video, please like, comment, share, subscribe. Share with all your friends, and I'll see you guys in the next video. Peace.